Welcome to a Forex Foley analysis. It is currently Sunday, April 24th. The time right now is 10:06 Eastern Standard Time PM. I'm just going to be doing a quick video on last week's price action, recapping the fundamentals of last week and kind of what happened last week, right? Between April 17th and 22nd. I also just wanted to mention that currently the new week is the last week of the April business month. So again, just be aware of that when you're going into trading this new week. But to get right into last week's price action and recap, last week was honestly quite an eventful week, especially towards the end of the week, as we saw more fear, uncertainty, and doubt enter the market. And this was due to the IMF meeting that was on Thursday. But yeah, we did see kind of a change in market sentiment and investor behavior after the IMF meeting on Thursday. So this new current fear, uncertainty, and doubt and change of investor behavior again was mainly caused by the IMF meeting, where we did see various central bank heads from around the world talking about the economic downside risks due to the current inflation issue, which is honestly a global issue. I know that America did clock in last week, 2 weeks ago, at an 8.5% inflation for the month. So that's fucking insane, right? So that, again, is obviously a continued risk on the whole global economy. We also did see central bank heads talk about supply chain and employment and job issues. Again, the continued Ukraine and Russia tensions. And honestly, I guess you could say the war within Ukraine, right? And the upcoming rate hike talks. Holy shit. The rate hike talks. I literally can't speak right now. My bad. But yeah, so that was kind of the main issues that the IMF meeting covered, and the central bank heads from around the world, from multiple central banks, Canada, America, Europe. The list goes on from who was at this meeting. But that was kind of the main points they discussed. And that's what we've been seeing, honestly, the past couple months, I'd say 2 months, and especially the past few weeks with inflation. Again, that's the key thing and the main issue globally right now that all the central banks can agree on, right? So that was the main focus for last week, and that was the issues brought up from the IMF meeting. And we did have, again, this was on Thursday, the IMF meeting, right? So for the rest of the week, the beginning of the week, it was a pretty normal status quo movement. Again, we were just playing with the continued sentiment, with equities holding the bullish sentiment, as investors did have strong confidence before the IMF meeting, regardless of the inflation risks. Again, the 1% and the general investors greedy as fuck, and they want this bullish train for equities to continue as long as they can, and they're going to continue to squeeze out as much as they can from the markets. We have to remember this, right? So it's pretty typical at this point, especially with COVID and just the shit that we have saw the past 2 years. This continued bull run, this is nothing new, right? But once we did peak, as we can see, at around 35,500, this key level, again, this is on the 4 hours, so there's a lot of levels here that you're going to see. But when we peaked this key level at 35,500 last week, we saw immediate rejection. And this was an aggressive rejection right back to the downside, where it engulfed and ate this whole move from the beginning of the week, right? So here, let me just turn off the key levels. I'm gonna get further into this, but I just want to explain kind of the rest of the movement and, again, the fundamentals of what happened last week. But for the beginning of the week, again, it was just a continued sentiment of the bulls and investor confidence, right? Just going through my notes here. So a lot more. Oh, and we did see, actually, towards the end of the week there, right after the IMF meeting, again on Thursday, we saw a lot more new fear, uncertainty, and doubt. But we did see, and this was another key point, we did see an outflow on liquidity primarily throughout the whole market, not just equities or commodities. It was the whole market, right? Usually when you see an outflow in liquidity from equities, you'll see an inflow into commodities, being gold, because that's a safe haven, right? But last week, this is why it's a key point, we saw an outflow of liquidity throughout the whole market, being gold, right? As you can see, this was US30, which we did see right here, this major outflow from the IMF meeting, right? Almost a 2,000 point move, right? But if we go over to gold, it's not like we saw gold fly. We saw gold pull back as well, right? And this was right after the IMF meeting as well, right? Where it peaked 2K, right? Again, if I turn on my key levels for this too, you can see, and I do have to update it, sorry. I apologize, haven't updated it. But you do see how kind of key level 2K is, around that 2K level. And we saw an immediate rejection and pullback from there. So again, that's just to highlight the outflow of liquidity as a whole on the market last week. But yeah, one sec, just grab my water here. Oh, and also, so we have to understand that this current new FUD brought from the IMF meeting, not so much brought from, but more so re-announced, like reinforced. Sorry, that's the word I'm looking for. Reinforced from the IMF meeting of the issues within the economy, right? This is what we have to understand, though, that this new current FUD that is developing is something that we could see still continue into this new week. So again, when you're trading, you just have to be aware of the fundamentals, what's happening in the market, because you don't want to fuck yourself over. Trust me, I've learned plenty and I'm still learning. So I just want to kind of give my piece on that. Also, I'm just kind of reenacting or reinforcing the fact that this is the last business week of the month of April, and typically going into May, and this is a point that I'm going to bring up right now actually, we see this. Sell in May and go away. So I'm going to explain this, because this is why I'm just want to highlight and really put to a point that this is the last week and we're going into May. So you have to be aware of what May historically brings, right? So sellers in May and go away. What does this mean? This typically relates to the equity market, as historically May is more of a negative month or a sell-off month, right? So it is well known within the financial world, and it is based on the historical underperformance of some stocks, and in the summary of the 6-month period, starting in May and ending in October, right? But mainly we're just focusing on May, again, because this is the new month coming up. Historically, we have saw with equities a sell-off in May. If we do go here to TradingView, obviously on US30, right? We'll go to the weekly, right? So this is going into May right now, and if we go to May 2021, right? Where is it here? May 2021, right? What is this? What is all of May? A sell-off after we peaked these kind of we peaked kind of these highs, but we saw in May, right? Highlighting May of 2021. What is this? A sell-off, right? And it was kind of a continued ranging sentiments and a sell-off, but this is historically, so that's May 2021, right? If we go to, actually, I can't really say May 2020 because we all know of the pandemic, what that brought upon. But if we do look at June, we did see a sell-off, right? So it's historically around that period is what I'm trying to highlight, where we do see some sort of equity sell-off. And obviously this major sell-off here was from the March 2020 crash from COVID. But yeah, so that's kind of me highlighting sellers, sellers in May. Sell in May, and go away. My goodness, I'm mixing up my words here again. Sorry it's Sunday, and again, we're just getting into the new trading week, so, give me a break here. But, yeah, that was me highlighting that. And we do want to pay attention to gold kind of going into this week, because if we start seeing an inflow in gold now to the upside, and an outflow in equities going into May, then that confirms our further sell in May and go away, right? But I'll just look over this if there's any more points. So some investors find this strategy more rewarding and staying in the equities market throughout the year, then staying in equities markets, so they can kind of highlight, right? History repeats itself, especially within the stock market. When you can highlight these trends or these months, quote unquote, right? You can milk the market, especially the 1%. We know that high frequency trading, we know that the breakers are, it's happening on every key level that they indicate for themselves, and we know they're getting a piece of the pie, and we already know they're preparing for sell in May and go away, right? So we have to kind of follow where the smart money is going. Obviously, you can read up on this. Honestly, I'll put a link to this in the YouTube video here. But yeah, that was me highlighting that. Now, to kind of break down the price action of last week, we'll go to the 4 hour to start. And I already kind of covered this. So to start the week, right, we were still in that range between, from my previous video, we highlighted the range between here of 34 600 and 34 200 between those key levels. If we do turn on, if I turn on the key levels here, you'll kind of see those stuck in this range, right? And once we finally broke out of that range at the beginning of last week, we saw an absolute breakout to the upside of about 1,000-point move from 34 600 to where it peaked at 35 500 last week, where then the IMF meeting on Thursday brought in this current FUD, which absolutely engulfed this whole move here. And then we saw a continued breakdown on Friday to end the week, where the weekly candle closed at 35 700 around that key level, which, this is to start this week, but oh my goodness. We saw a close about right here at 33 700 to close and end out last week, which it was just a continued downside due to the IMF meeting, right? So when we go to the 4 hour, zooming in now to the 1 hour even, and I can now kind of highlight these key levels, right? So again, just to go over how I pick my key levels, it's psychological price levels are the purple lines here. So it's based off every 100-point move on US30, and that's kind of how, again, I mainly trade US30, so you can kind of relate this to even the SP 500 or whatever you want to, S&P 500, SPY, whatever you want to. You just have to identify how you want to do your psychological price levels, but I found on US30, every 100-point move is a perfect PPL for me, right? So this is just zooming in on the price movement of last week. Again, once we finally broke out of that range we were in, we saw a continuement to the upside, right? Broke out. Even we could say here, we broke out of this range. A little bit of ranging here, and then we peaked here, 35 500, around there, right? 35 500, around there when we zoom in. And then again, absolutely breaking down. Now going into the lower time frame here, uh, 30 minute. Going into the 30 minute, again, you can just see, right? Just highlighting, just really, I just want to paint the picture of how we finally broke out of this range and then flew 1,000 points. Where was the rejection? Right by this previous 30 minute zone to the left here. This was where we saw rejections, right? And again, it lines up exactly with the PPL and key level, right? So that's pretty interesting. And when you zoom in even now to the 1 minute, obviously, this is where you're really going to see the breakdown from these key levels. Right? Fucking right from 35. Look at this. Okay. On the 1 minute, this is where you're really going to see the reactions of how, aggressively breaking down from 35 500. As soon as we tested 35 500, about I'd say 15 to 30 minute candle instantly rejects, and what do we come down literally within 2-3 hours, 300 points, and we just continued to break down. So when you really zoom into the lower time frame, especially on the 1 minute, you look at what you see, right? It's pretty crazy. And the price action to end the week, very a lot of volume and very volatile. And if you were trying to catch buys, you were just getting burned every single time. It just, even on the pullbacks, It was never coming up and breaking, right? Just pulling back, coming right back down. Pulling back, coming right back down. It was never staying above any PPLs or breaking back above once we really started breaking, like once price started breaking down, right? So, yeah, if you were taking buys, you were getting fucking burned. And again, I didn't do any videos last week, so that was my bad. But we were calling some sells from these key levels from 34,600 here. 34,600. Oh, this is on the 1 minute. So if we zoom out here, 1 sec, we were calling some sells. Once we saw market sentiment switch, we were calling some sells below 34,600, which would have played out beautifully, and 34,300. Again, you saw a little bit of these probably wouldn't have played out as nice, but once you finally started breaking below 34,300, you know, oh my god, over here, holy shit. Oh, you finally started breaking below, right? Oh my goodness. You just kept breaking down, right? So yeah, that was kind of lower time frame breakdown, and that was me covering last week. Let me just check my notes to make sure there's no points I missed here. And yeah, 1 sec. No, so that was everything from my notes. I hope you guys kind of were able to follow along. If you're still listening, I appreciate the support. I'm gonna be doing a lot more videos this week. I'm gonna be, really active, taking this shit serious. But yeah, that was kind of a breakdown of last week. I'm gonna do a trades idea video in the morning, probably hopefully before New York. If not, I'll do a video recapping New York. But please like, comment, subscribe. I appreciate any feedback, and check out I'm on Instagram as well and Twitter, Forex Foley. That's my ad on everything. And yeah, let's have a great trading week. Remember your trading rules, and